What's up, everybody? So today what we're going to be talking about is some fantastic high dividend crypto ETFs, and I'm going to be comparing them against basically the regular cryptocurrency itself that you could purchase yourself and these high dividend options. So obviously, how can a crypto ETF actually pay you a dividend? Well, what these guys are doing is essentially running covered calls against the cryptocurrency, whether it be Bitcoin or Ethereum. Either way, they are going to be running basically covered calls against them, and that gives a massive yield, at least so far. Now, remember, with this video, this is not sponsored whatsoever. This is just what I've seen on the internet so far. And these ETFs are extremely new. They started back in December. So there really isn't all that much history to go back on. But we also have to remember that you have to do your own research. Anyways, don't trust any random person online. And of course, always remember, whatever has happened into the past is no guarantee on the future. So let's get down, let's check these out. So this first one is a purpose ETF, and it's about Ether, and it's high yield, and it's gonna just absolutely blow your mind how big the yield is. Now keep in mind, this has only been around for 1 month, and I'm gonna be buying this probably before this video is even posted. I do not own this ETF just as of yet, but there are 3 different options, and they all pay ridiculously, stupidly high yields. The one I'm looking at getting myself is this one. It has a 1.1% management fee, which means that they take about 1.1% of whatever is invested in the ETF every single year, and it's usually divided up by 12, so keep that in mind. And this pays, oh my god, 21.45% of a yield, which means that if you were to stick only $1,000, which to some people may be a ton of money, but to me, $1,000 is still a lot of money, but it's not as much as it would be for some other people. But that would give you $214.50 every single year. That would be every single year. Divide that by 12, what you would get is a grand total of $17.87 a month. Now, of course, when we break it down this far, this doesn't seem like all that much money. However, when you're really thinking about it, guess what? That is about 1 hour of a close to minimum wage job. Which then means that, let's say you had $10,000, you would be getting $170-ish every single month on a $10,000 investment, or $1,700 a month if you had a $100,000 investment. So that is starting to look really, really promising. However, personally, unless you had millions of dollars, I would not be putting $100,000 into this ETF. And there is a reason behind that, and that is, of course, it is cryptocurrency. It's still a new type of investment. This is risky. And any time that there is massive potential gains and massive potential dividends, there's always a bigger risk. Anytime you start getting over 6 or 7% dividends, there's always going to be a higher risk of that dividend being cut, or that stock or ETF just underperforming. Meanwhile, when we start looking at the potential gains of cryptocurrency, especially Ether, which actually did really well last year versus Bitcoin, well, we start now looking at something that's even more riskier, because as we've seen with Bitcoin, it could go from 60,000 to 40,000 per coin within a month. You could literally lose 33% of your investment within a month. And to some people, that is going to be way too risky, which is why I suggest, for myself anyways, I'm going to be probably only putting a couple $1,000 into the ETF, because I would like that 20%, and the potential gains are there. And if I lose $300 out of a $2,000 investment, then I'm just kind of hoping that maybe that happened over a year period and the dividends cover some of that loss. However, this still looks extremely interesting because there's a lot of people saying that cryptocurrency is essentially the future. And as their website says, it is TFSA and RRSP eligible, which means that you could literally, if you had $76,000 in your TFSA and you wanted to just absolutely risk it all, which I wouldn't do, you could literally make every single year $16,264 tax-free. Now, I personally would not be making that bet or that risk. However, if that one person does it and they are luckier than anybody else, then that would be fantastic. But if you are not lucky, or I would suggest never doing this, that is just absolutely fantastic. Again, I don't suggest going all in on a single ETF. Ever. Like, never do that. So basically, the portfolio breakdown is this. Essentially, they have 102.5% of their portfolio, which means that they have more Ether coins than what they actually have money for. Essentially, that's what it means. And then they have 23% of those coins being covered calls. So basically, these are all written off over a month to 3 month period. They have nothing that is longer than 3 months at this time. So that is quite interesting to myself, and this just tells me, considering that the ETF is still quite new, that if we were just to wait maybe a month, 2 months, or 3 months, and then we can compare how this ETF does versus just holding the coins outright, then at that point we can feel more comfortable, because this only started back in the beginning of December. And when we start looking at it that way, and we can see how long those covered calls are out for, then at that time, if this still does closely mirror the price of Ether, and at the same time we're getting this 20%, then this ETF could all of a sudden become a huge potential gain for pretty much everybody. Like, this has massive potential, but I want to wait 3 months just to see how the price performance goes versus the actual price of the coins. Now, meanwhile, this has paid 2 dividends so far. It's paid a capital gains and a regular dividend style, and of course, that's quite interesting. So I'm not too sure if they're going to be continuing to pay 2 dividends every single month. That would be actually quite interesting. However, what we do see is at least 14 cents per share, which again is quite interesting. However, what we can base our decisions off of is, of course, the information that we do gather from here, which essentially just tells us that we should probably buy the actual ETF before the 29th or the 24th, depending. We, again, don't have enough information yet, depending on if they're going to continue to pay 2 dividends or maybe just 1. Maybe the reason why they paid 2 is because of the payout dates. It's hard to say, but if we grab it before the 24th or 29th of this month, then at least we may be able to get a dividend next month. Their website also has a whole bunch of frequently asked questions, and of course the biggest one for me was, is it monthly? And it is. Next is one I've made a few videos on so far this year, and the year is still new, and that is the Bitcoin Yield ETF. Same idea, basically the same thing, except it's Bitcoin, and the dividend's still ridiculously high, but not as high as the Ether one, which is quite interesting, to me anyways, maybe because there is more maybe frequency and the amount of covered calls that are being sold for Ether. However, there is actually a good reason for this too, and I'm going to show you a bit later, but their yields are quite high. I do own 240 shares of this one right now, and again, same idea, same stuff, same frequency, monthly schedule of dividend, or technically yield. It's capital gains. We have to remember that. The reason for this one having a lower yield is potentially this reason right here. Ether was 23%. This is 18% covered calls. And this one has a little bit less Bitcoin versus like percentage-wise of the portfolio. Again, same idea, 1 to 3 months. There's no covered calls that are going any longer. I know that there were some ETFs out there that were going as high as 4 or 5 months, which is kind of interesting to me why they would put that or even do that, or even how to do that. But either way, at 1 to 3 months, we still want to kind of see what's going on with the ETF itself. This one pays 10 cents per month, and again, we can use this as information, get it before the 29th of the month to get paid the 10th of the month after. And then this is kind of the breakdown that I want to really look at over the next 1 to 3 months of these ETFs. So what we have here is the price of actual Bitcoin and then the actual price of Ethereum or Ethereum. And from there, what we can see is that the charts actually kind of match up against each other as well. This is the Bitcoin Trust, Yield Trust. So from there, we can see that there was a little bit of a spike there, which is quite interesting. That could have been currency issues though, because this one, of course, has the fact that it's in Canadian dollars versus American dollars. So there could be a currency thing there. We didn't necessarily see it all that much there, however. So either way, this is how I like to really look at different covered call ETFs that try to just hold one specific thing. So for example, like there's covered call gold trusts that you can get into, and you can kind of track the price of gold versus that ETF. And if the charts match up and you're getting a massive dividend, then at that point it's a fantastic time to buy it, or a fantastic ETF to buy. But if this chart continues to go down while this one's going up, at that point I just would not be looking at the ETF. But we don't, again, have enough information. The ETF's only been around for about a month, and we haven't seen any of the covered calls getting, of course, fulfilled or whatever. So once we see that going on, then we can see if the charts are going to continue to go down. But again, the actual cryptocurrency itself over the past month has been going down anyways. So this is just how I like to compare covered call ETFs. This is just my way. Everyone's different, but that's my way. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. What are your thoughts on these ETFs? Let me know down in the comment section below. I'm really curious, and I'll see you guys again next time.